Is on pace for its sixth winning day in a row. Nasdaq's lagging today, but Fundstrat's Tom Lee thinks there are more gains ahead. The firm just raised its S&P 500 year-end target to 4,800, up from 4,700. And joining us is Tom Lee, managing partner at Fundstrat. So why did you take it up by 100 points?
Well, there's a couple of reasons for it. One, I think earnings are really affirming that demand is really strong for businesses and margins are holding. Entering a really good seasonal period for markets, especially into year end. And the third, which we talked about in our note last night, was the equities are exiting a 1 month consolidation or 30 days. That's happened twice earlier this year. Both times resulted in more than a 7% rally over the following 8 weeks. And so if you overlay that to today, we get to 4,800.
But Tom, if you look at some of the reasons for the consolidation, particularly during the month of September, Fed tightening, economic slowdown from very high levels, high persistent inflation, none of those have really gone away, have they?
They haven't, but as you know, sometimes the market looks at less bad as good. Inflation's an example that I think some of the pressures that were really evident, like used car prices or lumber, they're starting to roll over. From a COVID perspective, we've seen a really big retracement both in the U.S. and in Israel. And with regard to sort of the narrative around the economy slowing, there's just ample evidence of pent-up demand, whether it's the pickup in international inbound travel requests or if we look at credit card spending. I don't think we're really at that sort of peak everything because people are still quite nervous about COVID and we haven't really seen a full return to normal.
We were talking earlier, Tom, about the extraordinary start to this month we've had, particularly for some cyclical sectors, double-digit gains for energy, 7-8% gains for sectors like banks and materials. Do you suddenly get worried that we're running too fast at the start of this month after the September pullback?
Stocks have been pretty challenging for the last 8 weeks, and we know, talking to our institutional investors, they got pretty nervous, raised a lot of cash, got very defensively positioned. And we've only been rallying for about 6 days. I don't think that that's enough to kind of get people position squared. So I think most investors are underinvested right now in a time when stocks do pretty well seasonally. So I think, it has a chance to be kind of a melt-up. I think 7% is kind of a low number. I think we could be, well above 4,800 before year end.
So within that, are you staying in the cyclicals? And what do you do with technology if you're bullish on the economy and rates continue to go up?
I think it's actually both technology and epicenter. Epicenter makes sense because those are the things people were selling over the last 2 months, but that's really where the demand is recovering. Technology, I think, works because number one, it's a big weight in the market, and Bitcoin's really affirming that we're getting to a risk-on environment. But also technology is really your biggest solution to inflationary pressure. So I think investors are going to realize technology demand is going to pick up over the next 5 years. That's great for stocks like FANG and the semis and really the whole technology complex.
You mentioned Bitcoin. We've got to hit that, of course, with the new ETF. Tom, we know you're a long-term bull here. At 66,000 and after the launch of the ETF, do you pause in the short term or are you all in?
I think the ETF's a pretty big deal. We wrote about it earlier this week because it's really creating access to millions of investors to actually be able to own Bitcoin now through their brokerage account. We think the equilibrium price just from that increase in demand, let's say it matches to 2002 launch of the triple Qs, it could take Bitcoin to like 160,000 or higher in the next few months. But, Bitcoin is really a network value asset. It depends on adoption and if you look at a Metcalfe model or regression, Bitcoin's not expensive here. And if you project it, you could still get significant upside over the next few years.
Are you surprised that we haven't seen a clampdown yet, or were you always expecting that, regulatory-wise?
I think there is going to be I think that we haven't seen the last of regulatory actions in the crypto industry. So I don't think anyone who's in the industry should think that the SEC and Gensler aren't going to take any action. They have time on their side, number one. But number two, it's their chance to see who's being a good actor and a bad actor. And I do think there's going to be quite a lot of action taken in the next few years.
Tom Lee, great to see you as always. Thanks for joining us.
Thank you.
Tesla.